All right, so building a strategic portfolio. The first thing you need to know is what's your financial freedom number? Financial freedom. So we're not talking about uh, personal plane, um, have jets all over, jet setting style lifestyle. We're talking about first things first. Pick your ideal lifestyle. Don't worry about money. What is it you want to do on an ideal basis and on a daily basis, a weekly basis? What kind of life do you want personally? And you got to figure out what number that is. And it's going to be different for you depending on where you live and what the cost of living is there, what your tastes are, all that kind of stuff. But this is important, right? When you're talking to an advisor, you need to know what that is. What is your financial freedom number? What do you need on a monthly basis? And then we work backwards to build it. And then depending on your situation, we got to figure out, do you need, you know, core assets that are going to have, predictable cash flow, like those debt funds, for example, or like what I call a down the fairway. I don't know if you can tell I golf once in a while, but a down the fairway asset that is already stabilized. It's going to pay a lower return, but it's going to be very, very solid and have no volatility. Or do you need to continue growing, right? And getting into some growth assets. The way I really think of this, I actually think that we need to look at them into three different buckets. So just like those advisors we talked about in the beginning of this call, where they set up a 60-40 portfolio for you, stocks and bonds, I want to do the same type of thing in these private equities. And so what we'll do is we have 25% of someone's money going into debt funds that pay 12 to 15% on an annual basis. 50% going into core equity assets, things like apartments, mobile home parks, RV parks, maybe marinas fit in there. These are going to pay about 20% annualized. But again, mostly equity, right? So it comes at the end. And then you got 25%, the last 25% to go into some more speculative investments. These are things like that paving deal I told you about earlier, the roads, the oil wells, these little bit more speculative, like the bourbon, right? The bourbon fits in there. These are going to pay 40% on average. But it is a little bit more speculative. We do a really good job. We're going to talk about due diligence here in a minute. We do a really good job of identifying all the risks and trying to mitigate them. But these are all investments, right? Just like the stock market, they can go up and they can go down.